every week or every other week, it's just like a market capitulation. Yesterday was brutal. End of last week was brutal. We were all faked out after the Fed meeting. It's a tough time for any of us, invested in growth or tech stocks or in the stock market overall. It's reminiscent of the dot-com bust in terms of the valuations getting cut down.
There are so many bargains to be had right now. It's horrible to look at it on a daily basis, but looking at the things that we're invested in the way that we're positioned really for the long term, I'm happy with it, to be honest with you. I don't know. I mean, it could be another 6 months of, further down or sideways or whatever. I don't know where the bottom is, but I do believe that, value stocks are going to win out in the long run. Tesla's got way more demand than they can handle. If the economy continues to, really struggle and, wage growth goes down plus inflation hits, you could see a scenario where, the demand just is not there. And so Tesla has to lower prices, and that has, margin implications as well. So we're nowhere near, I think, that being a realized risk right now, but it's something that I'm really trying to catch.
It's on the radar.
Yeah, exactly.
Like the economy would have to go into a close to a depression almost, like beyond recession for demand to really hit Tesla's production, capacity or supply capacity of how fast they can build these cars in the next few years, especially. But it's possible. Also, crypto, Bitcoin, the big draw to Bitcoin was, number one, it's like its own asset class that's not correlated. And number two, that it's like a digital gold. That case hasn't really been proven in this latest downturn of the macro markets.
It's basically just a very high beta tech stock. I think there's reason to believe that it shouldn't behave that way over time. But right now, it's not an inflation hedge.
Elon and his safety, this is not to be taken lightly at all.
First started providing Starlink satellites to Ukraine. That's a very active undermining action of a regime that's, been known to assassinate, people on foreign soil. So he's clearly, aggravated Putin and his allies in Russia. So I think it really is a legitimate concern.
I think there needs to be precautions he needs to take to cut his risk down significantly from an assassination attempt. I hope he's taking it seriously. And so moving on, Lemonade. I caught the earnings call this morning, or I listened to a recording of it and read their report last night. I mean, we both sort of don't expect a whole lot until car insurance ramps up. They demonstrated some promising metrics on their earnings report about Illinois and its success of annual dollar retention. And it sounds like they're waiting for the Metro Mile acquisition to be more formalized, and they expect that to be this quarter. And then they expect the third and fourth quarter for it to be like a step change almost in how many states they offer to.
The headline numbers are a little bit disappointing. The one that jumps right off the page that every analyst is going to jump all over is their loss ratio, which that is not the metric to look at right now. What is way more impactful in the short term is what is the growth of your customers, and then what is the revenue per customer that you're generating from those customers. My kind of takeaway was the short-term numbers don't necessarily look great, but the long-term thesis is holding for sure.
It feels like the loneliest of all investments right now. And that could be a good thing if it turns the corner, which we think it will.
Tesla's an engineering company. It's a manufacturing company. And so I think to put an MBA, which Zach is, in charge is unlikely, as capable as he is. I think they want a product person, a manufacturing person, an engineer to lead. In my mind, that is when you get to the point where your earnings are incredibly stable. You've got to be kind of beyond or growing your top line and your earnings by 3% a year. I think they're probably a decade or more away from that, to be honest with you. So that's why I think the PEG ratio is such an important metric to look at right now.
I think it's way too risky to sell all your shares at once to do it. The stock is the safest thing.
At one point, Rivian was 150 billion while SpaceX was 100 billion. It's that never made sense. Potentially, this is going to go across the board too far in the downward direction. But then that's healthy for markets. The winners can kind of rally from there, and then those that are have been repriced down are priced more appropriately.